Isn't that also like maybe a big difference if you compare it to like a tech company, which basically can get like firebacks because they investors believe that they should take that money they have and invest in more verticals or more products, but in shipping is not the same because it's more cyclical, right? So in good times, you should, like you said, that's a good thing to pay back to shareholders so they can find new investment opportunities because like if you just look at the fleet of Golden Ocean, there's no point of making it bigger if it's not a good investment, right? So how do you balance that?
Yeah, that is exactly the point, that at the moment now, as I say, we bought a lot of vessels last year at a time when probably since the asset price have gone up 20, 30, 40% even, depending on age and class, but huge increase in asset prices. So at this point, we feel that, you walk into a territory where now assets are, if not overpriced, then they are certainly very, very expensive. So to spend money on that, we don't feel is in the shareholders' best interest. We may be able to right now in the short run buy expensive assets, create some cash flow on those. But of course, in 2, 3, 4 years, however many years, when the markets are normalizing, then you would have bought at an expensive time in the cycle. And as you rightfully say, shipping is cyclic; it goes up and down in waves. And therefore you have to adjust your strategy accordingly. And ideally, obviously, you buy in the low cycles and you sell in the high, and you take home profit in the high periods. And right now we are in a high period, or in the good part of the cycle, and that also means that we are selling vessels. We have sold 3 vessels alone this year, making 31 million, by the way, on that. Otherwise, pay back that money that we have surplus back to our shareholders. So yes, very different, environment that we're operating in versus a tech company, or you can say a lot of other businesses, really.
But looking at sort of the order book, I think you had a slide where the order book is so low right now, but it looks like it's a good time to earn money. So. But I guess that's also maybe a perfect segue over to the decarbonization piece, right? Because maybe there's a big risk at stake ordering new vessels if you don't have a clear path to that. But just looking at the order book, how would you summarize the order book looking at dry bulk sector right now globally?
It's very simple, 30-year low. So in other words, the influx of new vessel capacity is very, very minimal. And I think really that is the key story here for dry bulk and why dry bulk is so attractive at the moment. There is hardly any vessels coming into the market. And at the same time, to make things worse or better for the owners, is that you have huge demand for dry bulk commodities in general. So that means that the supply chain gets disrupted, leading to delay and of course a less efficient use of the fleet. And you will have new regulations coming in next year, which will further reduce the efficiency of the fleet, because you'll have to slow steam in order to comply with many vessels will have to slow steam in order to comply with new regulations from the IMO. So you create this very, very strong story on the demand side, and that means that we don't need the supply to grow very much before this is very attractive. In fact, we believe that the supply growth will actually outpace the demand growth. And that is a pretty interesting, seeing that already now we are making a lot of money, and you saw what we made last year. So the situation is, at least on paper, looking to become even better for the ship owners in the years to come. And if I can add to your decarbonization, you're absolutely right. One of the reasons, if not maybe even the main reason that there has been very little ordering, and certainly is no ordering having at the moment, is that there are so many question marks over what technologies are future-proof, truly future-proof. Because we all know, well, at least at Golden Ocean, we know that we have to change the business model from a high carbon model to a low and eventually zero carbon model. And in order to get to zero carbon, we don't have a path. We don't have the technology, at least not on a grand scale yet, that we can go for. So what we will see is that that's holding people back from ordering. But on top of that, you have increasing steel prices, which means that the vessels are, even standard or conventional vessels are going up in price. And at the same time, you have a lot of demand for building new ships coming from the container industry and from LNG, which has filled up the yards and further pushed prices up. So now we are at a situation where you have extremely high prices, question marks over technology, and actually also long delivery time. So you're looking at 2 years, maybe more, before you can take delivery of a vessel. And that is not a very interesting cocktail. So therefore, we expect that the order book will stay muted for some time to come. Certainly, we don't expect any ordering boom anytime soon. So we're quite optimistic, generally speaking, on the supply side of the equation, and generally optimistic about the future for dry bulk shipping in general.